Assalamu alaikum, peace to you all, good afternoon and welcome to our Pfida webinar with the founders. Myself, I'm Raza, CEO and founder of Pfida, and to my right here is Sheikh Salman Hassan, my co-founder and our chief legal officer. Inshallah, today we're going to be taking you through the Pfida products and services and the customer journey. And then we're going to open up the floor to Q&A where you can ask us all of your questions, inshallah. Do send your questions throughout. We've got our team in the background answering some of them as well. And then myself and Sheikh Salman will answer them live towards the end as well. And also be aware that this is a live stream, so you can rewind it if you miss a part. If you join late, for example, you can rewind it and then catch up later as well. Without further ado, we're going to get straight into the slides, inshallah, on our home buying and savings accounts. Okay, so actually before I get into this, just a quick format for the afternoon. We're going to spend, inshallah, no more than 40-45 minutes going through slides. We may get through it a bit quicker than that. And then we're really going to spend as much time as possible answering all your questions. We're probably going to have a hard stop around 8:30 p.m. But we usually find there's a lot of questions flooding through. We can see there's a lot of you online already. And so if we can't get through them all, we might take a bit longer if necessary. If we do get through them all, fantastic. So a bit about us. Pfida, first of all, the name. Some of you may be looking at the name and going, what the heck is that? Well, the word Pfida is from many languages. It comes from Arabic, it comes from Punjabi, Urdu, Turkish, Bengali, Persian. It means benefit in all of these different languages. Pfida means benefit. And the P at the front stands for people, because we want to be the people's benefit, and we want to bring tremendous benefit to you guys, the people, through the services that we offer. So that's a bit about the name. In terms of what we do, we help people to buy homes, people like yourselves, you wonderful viewers at home, to buy homes without a mortgage, without any debt, without any interest. And we'll get into what that looks like in just a minute. The crux of it is that it's partnership-based finance rather than debt-based lending. It is not a mortgage. It is really aimed at people who don't want a mortgage, particularly for religious reasons. We are an Islamic institution set up on purely Islamic principles. Of course, our product is available to everyone, but we appreciate that this is solving a problem predominantly in the Muslim space, where riba is the big issue that we've solved with this new product, inshallah. We went through the FCA process when starting up many moons ago, back in 2016, and it's important to understand, and we'll go through this in a minute, inshallah, that the Pfida product is not an FCA regulated product. And we'll go through why that is in just a minute as well. We've been funding homes in earnest since 2019. So that's when we really got going after 2 or 3 years of setup, going through the process with the FCA for a good couple of years, where they went through everything we're doing with a fine-tooth comb before finally concluding, actually, there's no need for them to regulate us. And we've got that in writing from them as well, actually. And, before you go, wait a minute, these guys aren't regulated, there's a very good reason for that. And actually, hopefully we'll be able to explain what that very good reason is. So do stay tuned for that. And I can see there's absolutely loads of you online now. Alhamdulillah, thank you so much for attending. So let's get into this. Next slide, please. So we're going to start off talking about our home buying product. Later, we'll touch very briefly upon our savings product as well. We're going to start off on some of the Shariah principles, which Sheikh Salman is going to take you through, some of the fiqh aspects, and then we're going to get into exactly how our product works and the customer journey. So over to you, Sheikh Salman.
Assalamu alaikum wa rahmatullah. I'm going to spend the next few minutes looking at some of the overarching high-level fiqh al-mu'amalat, we call it in Arabic, the Islamic rules and regulations, the laws relating to financial transactions. At the apex of those principles, particularly in relation to home finance, sits a principle based on a hadith, a very statement of the Prophet Muhammad sallallahu alayhi wa sallam, in which he says, al-kharaju bil-dhaman. So the word kharaj in Arabic means the profit or the return that you get from an investment or an asset that earns you a return. And dhaman means your liability for loss of your capital in that investment of the asset. And what the hadith is saying, and what the fiqh principle is saying, is that in relation to investment, what gives me the right to take a return is the fact that I risked capital. There has to be a link. There has to be a connection between the risk I've taken in an investment activity and the return I get. If I don't take risk, therefore, the principle is that I shouldn't really be entitled to a return. And so let's look at, for example, a simple interest-bearing loan. If I lend somebody £100, in fiqh we call this qard hasan, which means a goodly loan. The Sharia, Islamic law, does not allow us to charge any amount of money on top of that £100. So I can't agree with somebody to loan them £100 and they agree to give me back £100 and an amount, for example, £10, £110 in a year's time. That's called riba, which is generally equivalent to interest. So, and any extra amount on top of that loan is not allowed. Why? Let's understand why. It's because I haven't taken any risk in that money. If, for example, that person loses that money or that money is stolen from their pocket, or for some other reason they're dispossessed of that money, they still owe me that £100. Now, somebody might say, well, I have taken a risk because I've taken something called a credit risk. There's a possibility they might just default and not pay me back. And that is a risk. But what Islamic law says is that credit risk is not eligible to give me a return. So I can't take a return simply by taking a credit risk, because that's the very meaning of riba or interest. So it's very important to understand it, because sometimes we get people saying, well, banks do take risk. They lend to people and there's a risk that those people won't pay back. So, why can't they charge interest? Well, that's the very essence of riba, charging a return based on credit risk. So the distinction between credit risk and commercial or investment or asset risk is highly, highly important in understanding this principle. So let's go back to what we mean by commercial risk. Let me give you an example. Suppose I buy a property and I become a landlord and I rent that property out to a tenant. Now, what does that tenant do? That tenant lives in the property, which I must provide to the tenant in a habitable condition, and then I charge rent to that tenant. What gives me the right to charge rent? I've taken asset risk in that property. If that property is destroyed, can I require the tenant to reimburse me for the value of that asset? So the asset's worth £500,000, and then the property is for some reason destroyed. I can't recover that money. Can I then impose that on my tenant and say, now you must give me £500,000? You'd think that's absurd, it's bizarre. Why? Because that just doesn't make sense. I have to take asset risk as the landlord, and that's what gives me the right to then lease that to someone else and charge them rent. That's how it works. Okay, so that's one example. Now, with that example, I'd like to now look at this other distinction between rent and riba, because sometimes we get asked the question, well, certain institutions are providing financing and they call it rent. What's the difference between that rent and what we call riba or interest? Now, let me give you another example. Suppose you need to buy a house. Let's use a really simple example. The house is £100,000. The price is £100,000. You've got £20,000 and you need another £80,000. So if you were to go to the high street bank, any of the high street banks, conventional interest-based banks, they would say, well, we could lend you £80,000 and we charge you interest. And you say, well, I'm not interested. I'm not interested in an interest-based loan. So you go to an Islamic bank. Now, before I explain how the Islamic bank mortgage works, I just have to say that we're not here to criticize or put anybody else down. Our objective here is to inform you, give you the information so that you can make your own informed decisions as to what this product looks like, what that product looks like, and then decide based on your own understanding of your own condition. If required, you can get financial advice from an independent third party and make your own decisions for yourself and your family. That's the purpose. So we want to arm you with information to make your own informed decisions. Yeah. Now, the way Islamic banks work is they say, well, we can't lend you the £80,000, but what we can do is enter into a co-ownership. This in Arabic is called a musharaka, a type of partnership. So they put in £80,000, you put in £20,000. On day one, you're 80-20 partners. So far, so good. In fact, musharaka is actually a great contract, and it's actually the same contractual basis of our product. And I'm going to explain to you how our product is actually slightly different to the Islamic banking product and why. But the bank then enters into this co-ownership with you, the musharaka. Now, in the same contract, in the same transaction, they have a clause which says you agree to buy our share for exactly £80,000. Now, of course, you're not going to pay that immediately, because if you had the money, you'd just buy the house, you wouldn't be there. They give you time. So they'll give you a period of time, 10 years, 20 years, 30 years, to pay off that £80,000. Now, the important thing to remember here is you are now legally bound. You're obligated to pay them the £80,000, actually, regardless of what happens to the house. So now what's crystallized through this clause is a money debt. A debt arises now that you now owe that Islamic bank. And if you think about it,
credit risk, right?
It's credit risk.
It's credit.
Exactly. So now the bank is, and talking about risk now, what the bank has through that contract is your credit risk, because they no longer take any more risk in the property. They've passed that all on to you. And actually, there's clauses in the contract that make that very, very clear. And it says that at any time during the term of the contract, if the property is destroyed and they can't recover any money, then you must immediately pay off the remainder of the £80,000, i.e. buy the remainder of their share, pay that off immediately so that they recoup their original capital, just like a conventional bank would. And that effectively results in them taking your credit risk and not taking asset risk in terms of the risk profile of the transaction. Now, if you actually think about it from fundamental Sharia principles, if you have a partnership and one partner sells their share to the other partner and allows them to pay in installments and pay exactly the same amount, in principle, there's nothing wrong with that, because it just results in a debt which looks like a qard hasan. So far, they put in £80,000, they sold you their share for £80,000, given you time to pay it. It's actually quite a beneficial contract. It's not a problem if that were all it were. The issue is, on top of that, within the same transaction, there are other parts of the contract that say that you must also, in addition to paying them the £80,000 in installments, you must also rent their share of the property from them on a monthly basis until you've paid off the full amount of that £80,000. So you're now, and some of you are scratching your heads thinking, hang on, they sold you their share, but then they're also selling you that the use of that share again through a rental contract. That doesn't quite make sense, and you're absolutely right to think like that. It actually doesn't make sense at a sort of conceptual or existential level, which is why some people say, well, it's slightly fictional. But actually, what's happening here is there's two sale transactions being combined to replicate the effect of a ribawi outcome. That's what some people would argue. And this takes me now to the third principle, which is a hadith again of the Prophet Muhammad sallallahu alaihi wasallam, in which he says, in which it is said of him, "Naha an bay'atayn fi bay'a." The Prophet Muhammad sallallahu alaihi wasallam, he prohibited the combination of two contracts of exchange or sale. Now we call it bay'a. Bay'atayn fi bay'a, two contracts of sale in one. So if you look at the Islamic bank mortgage, you find that firstly the bank sells you their share, and that's an obligatory sale. It's not voluntary. That's really important. I'm going to come back to that in a bit. It's obligatory. You've committed legally to buy their share. Now there's a money debt, credit risk. So that's one sale. They then sell you the use of the same thing, the use of the property for a rental payment. That's another sale. It's another contract of exchange. And it's the combination of those two contracts in the context of this transaction that results in a financial outcome that's actually almost identical, it's not almost identical to a conventional interest-based mortgage.
Could we give a really simple example of how it's possible to combine two contracts and actually completely replicate riba? And I know you've previously given an example about selling a piece of metal back, and I think that's a really good way of conceptualizing.
Yeah. In fact, why don't we simulate that here? So suppose imagine Raza is a customer and he's come to me, I'm the Islamic bank, and he says, I need £100 for just a personal loan. And I say, well, I can't give you £100 loan and charge you 110 in a year's time. But what I could do is, hey, here, I've got this, imagine this is a piece of metal. I've got this piece of metal. I could sell that to you. So imagine I sell that to him. So if he takes hold of that, in reality, that piece of metal doesn't change hands, but let's just change hands so it's easy to see. And I sell that to him for £110,000 on credit. So I give him the opportunity to pay that in a year's time. Yeah. So now he owes me £110,000. What results? A credit risk. He owes me £110,000 for that glass, and now there's a credit risk. There's a debt. Now, if he immediately sells that back to me for 100, and I give him 100 cash, he's now got 100 cash in his hand. I've got my piece of metal back, and he owes me 110 in a year's time. So can you see the combination of two simple sales, a sale and a sale back, can result, if they're connected up in this way, in effectively an interest-based loan.
And that's the crucial bit, the fact that they're connected. Because actually, you could sell me metal for 110. Later, I could come back and sell it to you for 100, and there'd be nothing wrong with that. But it's where you're selling me the metal for 110 on condition that I immediately sell it back to you for £100 cash, right?
Exactly.
That's where you got the issue of two contracts in one, and that's where hopefully you guys at home can begin to see that is effectively just riba. He's giving me £100 cash. I'm now owing him £110. Which is no different to a loan with interest, right?
Yeah, yeah. So with that backdrop, let me just give you two examples. Now, Islamic law doesn't forbid there being debt, because I could just lend him £100 and he pays me £100 in a year's time. That's just a qadha hasan. In fact, that's a blessed contract. That's like an act of charity.
Yeah.
Right. So long as I'm not charging anything more, I can take credit risk, and that's a good thing. If I'm charging more, there shouldn't be a credit risk relationship. There shouldn't be a debt relationship between us. So for example, if he's my tenant, he doesn't owe me anything. He's not in debt to me. He's just living in the property, and I'm charging him rent. Right? That's fine. Right? So long as there's no debt relationship between me and him, where he doesn't owe me anything, I can charge him for the use of my property or for any other business relationship. You see? So we need to distinguish between those two relationships. One is the relationship of credit or debt, and the other is the relationship of landlord tenant or some form of investment. Yeah. So when there's no obligation on him to pay me money in the future, then and there's a business relationship, I can charge him for that. That's not a problem. All right. Now let's look at our contract. Now in our contract, there is no debt. That's the key feature.
Just before we get to that, Sheikh, because we've talked about the Islamic bank contracts, it is worth highlighting that these have also been approved by Pfida scholars, right?
Yeah.
And maybe it's worth just pointing out.
Absolutely. Now, we would strongly reiterate that we are not suggesting that they are not Sharia compliant, because there are differing views among the scholars, and those are legitimate. And scholars throughout Islamic history have had different views, and that's fine. We take a certain view about that, or I have a certain view, but that doesn't mean I would impose my view on anyone else, or I would necessarily say that the other scholars who approve those other products are wrong. In fact, many of them are my own teachers, and those who are not my teachers, they're my friends. We have regular conversations, and I often ask them, why do you approve these products? And unanimously, they say that we understand that these products have these issues. They are not blind to those issues. What they say is that we are allowing these practices as a short-term dispensation, as an allowance, to enable the Islamic banking, Islamic finance industry to gain a footing. And our mandate to the industry is to move towards authenticity, to move towards genuine Islamic finance. So in a sense, we see ourselves as Pfida, we see ourselves as a response to that mandate, response to that call by scholars unanimously, those who approve or disapprove of those products. They say that we must move towards authenticity. And so we see ourselves as effectively the second generation of Islamic finance, where we have moved to authenticity. And there are, alhamdulillah, no issues with our product. We have not had a single Sharia scholar to date who's expressed any concern about our product. Sometimes they ask questions because they want to understand, but once we explain everything, there's a sigh of relief, and many scholars have said that actually this is the only genuine Sharia compliant product which has no controversial issues that they've ever seen. Now, in terms of our own Sharia compliance, of course, I'm responsible for Sharia compliance internally. We are externally certified by an independent Sharia certification body called the Islamic Council of Europe. They have a wing called Islamic Finance Advisory. Now, the Islamic Council of Europe is headed up by Sheikh Haytham al-Haddad, who's a tremendous supporter of our product. From the first day that he heard about it and we explained it to him, he's been extremely supportive. And Islamic Finance Advisory is a sort of subsidiary of Islamic Council of Europe. They have not only certified our home finance products, they've also certified our funding model. So we are end-to-end, A to Z Sharia certified. Not all Islamic finance providers are certified in terms of the way they raise their capital. We are too. And not only that, we also have an annual audit where each year they come and they audit all of our contracts and our operations, and then recertify us for another year. So we're very robust and rigorous in the way that we both internally and externally control our Sharia compliance. So I was going to move on to something else, which...
Our product.
Oh, our product. So how does our product work? So our product is essentially a musharaka, it's a co-ownership. Now, the key difference between our product and the Islamic bank mortgage is that in our product, there is no obligation on you, the customer, to buy our share if you can't or don't want to. So, for example, in that example, that £80,000 that we put into that property, you don't have to buy our share of us for £80,000. Now, you can offer to do so, and our policy is always to sell it to you at our original acquisition cost, which gives you over the long term the equity upside, which is expected in the long term, inshallah. So we don't put you into any debt. Now, because we don't put you into debt, our product is essentially, at its core, really a shared ownership. It's a landlord-tenant relationship where you're paying us monthly rent, and at any time you can offer to buy more of the equity of the property, in which case our policy is to sell it to you. And as you buy more and more of it, ours reduces and your rental liability reduces until eventually you get to a position where you will own the whole of the property and we will transfer the property to you. So it's very, very simple. Because there's no debt, the rent we charge is genuine rent. And also you'll be pleased to know that we don't peg our rent to the Bank of England base rate. So there's no interest rate benchmarking in our product. Our rents are based on genuine market rent for that property in that postcode. And we're very proud of that, because I think we may be the only Islamic finance provider that does that.
Certainly one of the only. Yeah.
Well, in terms of the way we finance, but there are other shared ownership providers who are more like shared ownership. Whereas actually with us you get the benefit of shared ownership, but our rental pricing is more like a home finance product that you get with a mortgage.
You get the experience of a conventional model, but you get the purity of the shared ownership.
Exactly.
And that's what we're very, very proud of. We've struck that balance in the middle. I just want to at this juncture point out that alhamdulillah, there's absolutely loads of you online, mashallah. This webinar actually, we've had over 600 people register for this webinar. So alhamdulillah, it's lovely, wonderful to see how much interest there is, not ever, how excited people are to attend, and we're absolutely delighted to have you. Just again, a reminder for those people joining now, and that number keeps going up by the minute, mashallah. It's a live stream, so if you joined a bit late, you can rewind and you can catch up as well, inshallah. Okay, should we move on? Okay, on to the next slide, inshallah. So I'm going to very quickly walk you through the customer journey. I'll quickly reiterate how our product works as well, which Sheikh Salman has already touched on, and I'll go through that in a little bit more detail as well. In terms of the customer journey, it's actually fairly similar in terms of the journey to how a mortgage would work. So we would first of all provide you with what's called a decision in principle. So this is where you fill out a 5-minute form, tell us how much you're earning, what your expenditure is, what kind of property you're looking for. And at this point, we will say, okay, without having checked any of that information, based on what you've told us, if what you're saying is accurate, in principle, yes, we would be able to fund you, and here's how much funding we'd be able to provide. In other words, we give you an actual certificate with your property budget. So you now know what kind of property you can go and search for. You go find that property within your budget. And when you put your offer in and get your offer accepted, the estate agent will want to see your decision in principle, because they want to know you're serious. They want to know you've actually got funding lined up. So you'll show them your decision in principle, then the offer will become fully accepted. At this point, you'll come back to us, you'll fill in the full application form, which is much longer. You provide a lot of supporting information at this point. So all of, you provide bank statements, you provide payslip history, we do credit checks and credit report checks. And it's quite an involved process here, because we have to go through every minor detail and make sure that we are not overburdening you inadvertently by effectively funding more than you can comfortably afford to pay off, right? So now what happens is, assuming all of that checks out, we get the property surveyed as well, make sure we understand the property, because from your perspective, you don't want to necessarily move in there if there's damp in the timbers and the roof is going to come crashing down any minute. So that's what the survey tells us, anything we need to be aware of. Assuming that all checks out, we then proceed to purchase the property. So the property is purchased effectively by us in our special vehicle, which I'll come to in just a minute. So we've got a special company which owns all of the underlying properties for our customers. You guys, our customers, are part owners of that company, and our other savers and investors are also part owners of that company. And the way it works is over time, your ownership of that company increases, and therefore your ultimate ownership rights over your property increase as well. And eventually, once you get to the right level of ownership, i.e. if it's a £100,000 property, once you get to £100,000 of equity, then that property transfers over to you. So just rewinding a bit, we buy that property, you effectively become a tenant because we buy that property into this special company and we now lease the property to you. So you become a tenant, you have ownership rights, partnership rights through the contract that we set up with you, and you also rent the share that is effectively ours. And now rent is the only thing you need to pay. So effectively, let's say it's a £100,000 property, you've put 20,000 towards it, we've put 80,000 towards it. So you would now pay rent on our 80,000 share. You can, from month to month, choose to buy more of our share from us, and you can do that through our app, which we'll cover in just a minute, which makes that really simple for you. Or you can choose to just pay rent. It's entirely up to you, and you can rent for as long as you like. But we know that our customers aren't coming to us to just rent a property. We know our customers want to get to full home ownership, and so we help you achieve that. So the way we do that is we incentivize you by giving you rental discounts whenever you're sticking to your target. So what this means is if you say, right, I want to fully own my home after 30 years, we will tell you how much of our equity you would need to purchase each month in order to fully own the property after 30 years. And that is just maths to help you understand your target, help you achieve your goal. You can go higher than that number, you can go lower than that number, you can throw that maths out the window and just rent if you like. There's no obligation, but this is just us helping you understand what your goal is. But because we want to help you achieve your goal, we want to help you get to your dream of full home ownership within your target, which may be 30 years as an example. What we'll do is we'll say whenever you're sticking to your target, we will give you a rental discount, and that is your incentive to stick to your goal as long as you can afford to stick to your goal. So let's put a very simple example around this to really help understand what I mean. Let's take the example of a £100,000 property, and don't read into these figures, they're completely made up. Let's take the example of a £100,000 property, where for argument's sake, you've put 50,000 towards it and we've put 50,000 towards it, so we're 50-50 partners. And we determined the base rent on this property would be £1,000 per month. Now, you're only going to pay rent on our 50% share, so your rent is £500 per month, right? Now, you can just pay £500 per month, no problem at all. But we may say to you, right, to achieve your goal of full ownership after 30 years, instead of paying £500 per month, if you pay a little bit more, let's say in this example, £600 per month, whenever you do that, we're going to give you a rental discount. And so of that £600, instead of £500 being charged as rent, we're going to charge you less as rent and more is going to go towards equity purchase. Now, these rental discounts are typically at least 5 to 10%. They can, in some cases, and it varies by customer, by property, by location, it varies quite substantially. In some cases, the rental discounts can be significantly higher. They can be as high as 30% or even higher in some rare instances. So let's say in this instance, it's a 30% rental discount we're going to give you. So whenever you pay that £600 payment, instead of charging you 500 of that as rent, we're going to discount your 500 rent by 30% and only charge you 350 as rent, which means of your £600 payment, 350 goes towards your discounted rent and the remaining 250 goes towards equity purchase. So it means as long as you're sticking to your goal, you're getting that wonderful rental discount, which helps you get to your home ownership goals. And that's your incentive. As long as you can afford to make your target payments, it's your incentive to make your target payments because we want to help you get there, inshallah. Now, we'll come to the investment account in just a minute. Effectively, anyone who opens a savings account with us, it's an investment savings account, and we'll cover that in just a minute, inshallah. When you come to buying your home, that investment savings account effectively works as your credit, your partnership share in your property. And what you're doing when you're buying equity is actually topping up your investment savings account. And that is genuine equity you're purchasing, which effectively reduces your rent, increases your partnership share. And you can do that anytime. So from month to month using our app, which again, as I said, we'll cover in just a minute, you can flex your payments according to your needs. And this is the true mark of a debt-free arrangement. You don't have to stick to a rigid payment plan as you would with a debt. This is offer an acceptance. You can say this month, I just want to pay my rent. This month, I'd like to buy an extra £1,000 of equity from you. And our policy, as Salman mentioned, is whenever you want to buy from us, we will always send it to you. So you can say, right, this month I'd like to buy an extra £1,000 of equity from you. This month I'd like to buy an extra £3,000 of equity from you. And you're welcome to buy as much or as little as you like, whenever you like. And that's the flexibility of the final product. And effectively, as I mentioned, once you get to your full sort of target equity ownership, at that point, the property becomes yours. Right, so let's move on to the next slide, and we're going to compare this now to a sort of conventional or even actually an Islamic bank mortgage. So the first thing to bear in mind is that with our product, it's completely debt-free. So as Sheikh Salman mentioned, if it was debt-based and we were charging you money on that debt, that would by definition be riba, right? Because under Islam, you cannot charge money on a debt. You can only charge money for the asset, for the actual investment, not for the actual debt itself, for the monetary debt. There is true risk sharing with our product, and that is the acid test of a partnership. So, for example, if myself and Sheikh Salman buy a car together, if that car is destroyed, as partners, we both have to share that loss. I cannot say, Sheikh Salman, the car has been destroyed, you must now immediately buy my share of the car from me. Sheikh Salman will say, what car? There is no car. I don't want to buy this non-existent half of a car from you. It doesn't make any sense. It's absurd. So the true mark of a partnership is risk sharing. If anything happens to that property, if the property is destroyed, if there's no recoverable on that property, you don't owe us anything. We take our share of loss. You take your share of loss. That is a true partnership. There is cost sharing as well. As your landlord, we have a responsibility to make sure that we are covering our share of upkeep and maintenance on that property. Now, it's important to note, because you have a lease over the property, which gives you a right to live in that property for the entire duration of the lease, as long as you're not defaulting or breaching the terms of the lease. So again, what I mean by that, when you're renting from a landlord, you have a 1-year agreement. It's called an assured short hold tenancy. And every year you have to renegotiate terms. And the landlord at the end of the year might say, no, actually, I don't want to, keep renting this out. You have to find another property. And also you have to rent whatever property the landlord happens to have available. With us, it is a landlord-tenant relationship, but the difference is you can choose whatever property you want. You don't have to rent whatever property we happen to have available. You find the property yourself, and we help you with the due diligence on that property, right? So you can rent whatever property you want, and you have a lease, which means instead of a 1-year agreement, it may be a 20-year agreement, for example, which means as long as you're paying your rent, taking reasonable care of the property, you have a right to live in that property for the entire duration of the lease. Now, because it's a lease that you have, it means that you are responsible for day-to-day minor maintenance in the property because you are the one enjoying exclusive use of that property. But we have a responsibility for major maintenance, making sure the property is habitable, for example. And under Shariah, we must cover our share of that cost. And again, that is a true mark of a partnership, and we do. And we do that in a couple of ways. One is, as I mentioned, this rental discount that we offer you month to month. You can think of that as our service fee that we're paying to you to cover our share of maintenance as it comes up month to month. That's one way in which we cover it. The other way in which we cover our share of costs is, as Sheikh Salman mentioned, we always sell the property to you at the original purchase price. So 30 years later, as you're building up your equity, that property may now be worth £500,000, but we still sell it to you for the original £100,000 price, which means you get to keep all of the upside. Now, we're a partner in this property. We have a right to take our share of upside, but we gift it to you. The reason being that we know property values tend to go up 5 to 10% per annum across the board in the UK. Wages only tend to go up 1 to 2% per annum. So if we were to sell the property to you at market price, every time you want to buy equity, we revalue the property, that value's gone up and it's going to cost you more to buy it. We know most of our customers would never be able to get to full home ownership. So we actually gift our share of the upside to you, and that is also aimed at covering our share of costs as they come to you. So the rental discount and the upside in the capital appreciation of the property, those are our two mechanisms for covering our share of costs as they come to you. And in 99.9% of cases, that will more than cover our share of costs. In the extreme case where it doesn't cover our share of costs, we will dig into our pockets and we'll cover it. We must do this under Shariah. This is non-negotiable. This is the true mark of a partnership. Another really unique feature of our product is what's called the equity buffer. Now, imagine with a conventional bank where you're paying £1,000 per month, which is your interest plus your capital repayment. You must make that £1,000 on the nose every month. And if you can't make that £1,000 payment, you're in default. And when you're in default, the bank may give you a couple of months to make good on that. And realistically, very quickly, they're going to kick you out of your property and take your property off of you. With our product, you have what's called an equity buffer, because when you're buying equity from us on top of your rent, that's tangible equity. You actually get share certificates proving that equity that you've purchased. So let's say, as an example, your target monthly payment is £1,000, which is your rent, plus your target level of equity purchase, right? First of all, if you've only got £800 in your pocket because you had a big expenditure this month, you can choose to just pay £800 this month. Maybe your rent is £600 and you just choose to buy another £200 of equity this month. No problem at all. But let's take the more severe scenario where Allah protect every single one of you. You've lost your job. You can't even afford to make that £600 rental payment. Well, now you can pay us through your equity buffer. You can actually trade equity with us. And this, in our eyes, is the same as you paying us cash. Instead of paying us cash, you're paying us with some of your equity instead. This is what we call your equity buffer. Now, to put that into perspective, so as well as having more breathing room in times of difficulty, instead of paying £1,000, you can pay £800 or just £600 rent. If you can't afford to pay the £600 rent, the equity buffer gives you security in your home. And to put that into perspective, our average customer who has, let's say for argument's sake, 10% equity, if they lost their job on day one without ever having made a payment, that 10% equity buffer would last our average customer around 2 to 4 years. So this gives an unprecedented level of security in your home, so that if the worst thing happens, Allah protect you, if you lose your job, you can't afford to make your payments, the last thing you have to worry about is, God, how am I going to pay the mortgage? You know you're covered. You've got the security of the roof above your head, so you can focus on what's important, getting back on your feet, finding another job and starting to make payments again. Because personally, we think it's abhorrent that when a customer is down on their knees going through the hardest time of their life, we think it's abhorrent and should be practically illegal for a bank to then come and take their home away from them. And this is the beauty of the Islamic etiquette. This is the wisdom behind the Islamic partnership contract. It protects you as well as us. It protects both sides of the equation. From your perspective, you keep the roof over your head. From our perspective and our investors' perspective, it means there's no default. So both sides benefit from this relationship, and that is the beauty and the wisdom behind the Islamic contract. And our product has huge flexibility, as I've covered briefly, and I'll cover it a bit more when I go over our web app as well, inshallah. Okay, let's move on. So very quickly, just comparing our product to renting, because if you think about how our product works, there's two extremes of home ownership, which Sheikh Salman covered at the start. One extreme is buying a property with a mortgage, right? You borrow money from the bank, you become the owner of that property from day one. You take all of the risks as well in the property because you own it. So if anything happens to that property, it's entirely your headache. That's one extreme of ownership. The opposite extreme is renting, where you don't own the property at all, and actually you don't take any of the risk or the headache. The landlord does. If anything happens to that property, it's not your responsibility, it's the landlord's headache. Our product sits in the middle. It's part ownership, part rental. So we've just compared it to a mortgage type product. Let's compare it to a rental type product. Well, with our product, you genuinely get onto the property ladder. Whereas when you're renting a property, you don't. You're simply renting, you don't have any ownership whatsoever. With our product, it's designed to get you to full home ownership by the end of your term. With our product, you choose your own property, as I mentioned. So you don't have to just rent whatever property the landlord happens to have available. We're very keen for you to choose the property. It should be your home, which you love and want to raise your children and your family in. And so you choose the property within our parameters. And on our website, when we give you a decision in principle, we explain what our parameters are. Things like dilapidated properties, things like very, very old properties, generally will avoid. And you can see that list of exclusions on our website. But as long as you're sticking to those parameters, you choose the property, and then we'll get the property surveyed and make sure we're both happy with it. You keep your share of profit if you sell the property. When you're renting, the landlord keeps all of the share of profit, keeps all of the profit as that capital appreciates. With us, as the property appreciates in value, while you're buying it from us, we still sell it to you for the original purchase price, which makes it a very cost-effective product. You get to keep all of the upside. That's our gift to you. Our business model is built off of the rental income that we make. We've designed our business to make sure that it is sustainable purely from the rental income. And I need to actually clarify here. When you're buying the property from us, we sell to you for that original purchase price. The exception is when you want to sell the property. because when you sell the property, you're now actually crystallizing a profit in your hand. Now, we are your partner in this property. We have genuinely shared in the risk of this property as demanded by Sharia finance. So in this situation, it's fair that we take our share of profit if you sell the property. So you'll take your share of profit, we'll take our share of profit. And there's another exception here. If you want to sell the property because you want to upsize, you want to buy another property, let's say your family's growing, you need a bigger property, we want to facilitate this. This is aligned with our mission of increasing home ownership, particularly amongst Muslims, and increasing wealth, particularly amongst Muslims who are some of the most financially excluded in society. So what we do here is if you're selling the property in order to buy another property with us, we say, okay, we're only going to take half of our share of profit. And we're going to give half of our share to you and you keep all of your share as well. And that's how we facilitate your upsizing. So you keep either all of the profit or the lion's share of profit. And we try and be as generous as we can whilst also being fair to ourselves. You have security of tenure. What I mean by that is rather than having a 1-year agreement with your landlord, you have a lease with us, which gives you absolute security in your home for the duration of that lease. And our policy is if the lease expires and you want to renew it, our policies will always renew it as well. And you can redecorate the property, keep a pet if you want. It's your property. You can do as you like with it. The only exclusion there is structural work, which unfortunately we don't allow. So as an example, if you want to fit a new kitchen or a new bathroom, redo the wallpaper and the carpets, no problem at all. But if you want to knock a hole in the structural wall, that is where we have to draw the line because that becomes too risky and we just can't manage that, unfortunately. So the one thing we can't allow, unfortunately, is structural work. But otherwise, as you can see, when comparing it to a conventional mortgage, we give you all the benefits compared to a mortgage. When comparing conventional or Islamic mortgage, in fact, and when comparing it to a rental product, we give you all the benefits compared to a rental product. So this is what we're very proud of. We've created a product that gives you the best of both worlds. Okay, let's move on. I think that's the last slide on the home buying product. Yes. So now we're going to very quickly cover our savings and investments product as well. And the reason for this is I should note that actually, before we go on to the next slide, I promised I would come back to you on the FCA point. I think we may have a slide on it later, but I'll quickly cover it now. And I'll also cover the savings account as well, why we're going to take you through that. On the FCA side, now you've seen how our product works. There is no debt in our product whatsoever. It's a true partnership, right? Now, why are conventional mortgages and indeed Islamic mortgages regulated by the Financial Conduct Authority? Because they are debt-based. When you take out a mortgage of any kind, you are taking out a debt worth hundreds of thousands of pounds, which is effectively going to last a significant portion of your lifetime, possibly the rest of your life. And the word mortgage, by the way, if you don't know, it comes from sort of Latin/French. There's a bit of debate on which language it is. It's either Latin or French, but you'll recognize the first half of the word mort. Mort means death. The word mortgage means death grip or death pledge. In essence, when you take out a mortgage, you are in the bank's grip effectively until death, because it's a debt, it's an effectively lifelong debt. And the reason that has to be heavily regulated is because if that debt worth hundreds of thousands of pounds is the wrong product for you, it can ruin your life. It almost certainly will ruin your life. And we know how many lives are ruined through debt poverty and through problem debt. It's a huge problem. Actually, a debt poverty relief charity called Step Change conducted some research recently and concluded that problem debt costs the UK economy around £8 billion per annum. £8 billion. This is the cost of people not being able to keep up with their mortgages and other debt payments, losing their jobs, the mental health issues suffered as a result of that, familial breakdowns. All of the societal cost of these issues amounts to about £8 billion per annum. So that is why debt has to be so heavily regulated by the Financial Conduct Authority, because the consequences of debt can be catastrophic if it's not managed correctly. Our product is no different to renting a product from a landlord, renting a property from a landlord. Just as landlords don't need to be regulated by the Financial Conduct Authority, nor do we, because we are essentially just a landlord renting a property. Why do we not need to be regulated? Because there is no debt. If the product is wrong for you, it's not going to ruin your life because you don't owe us anything. You don't owe us those hundreds of thousands of pounds. Just like with a landlord, you can stop, change, move on anytime you like with no strings attached. And that is why the financial regulator themselves concluded, actually, we don't need to regulate this product. So some people, when they find out we're not regulated, they say, oh God, maybe I should be aware. And actually, I like to flip that on its head and explain that the reason it doesn't need to be regulated, as concluded by the regulator themselves, is because there's already enough protections built into the product for the customer. It's not going to ruin your life if it's the wrong product for you, whereas a debt product most certainly would. So that's why it's not a regulated product. And if it were a regulated product, honestly speaking, that would be a red flag, because if it were a regulated product, that would mean it's a debt-based product. And if it's a debt-based product and you're being charged for that debt-based product, that means it's a riba-based product. So the fact that it doesn't need to be regulated, A, means there's enough customer protection built into there already that the regulator is satisfied, and B, means you can be absolutely comfortable that there is no riba in this equation whatsoever, because that is what the financial regulator regulates. Okay, the other thing I wanted to talk about was our savings account. The one major thing to be aware of with our product is that there is a waiting list. We're still a relatively new business, not quite as big as the big banks yet, but our demand has grown astronomically almost overnight. Now, what that means is that there is a waiting list, and the waiting list is very, very long, unfortunately. So if you want to just sign up to our waiting list, you can do it from our website. From our website, you sign up for a free account, and when you sign up, it asks you, do you want to join our waiting list? And you can do that, no strings attached. But that's what we call the public waiting list. And we think someone joining the public waiting list now has around a 5-year wait time. Unfortunately, it's extremely long. But we do have a way for you to get served quicker, and that is anybody who opens a home savings account with us, i.e. a savings account with a view to buying a home with us. Anyone who opens a home savings account with us, where we can see your deposit, we can see that you've got your deposit ready, because there's no point us prioritizing people who don't have a deposit ready yet. Well, we can see you've got your deposit ready, and you get a return on that as well, which we'll see in just a minute. Anybody who opens a home savings account with us and puts their deposit with us in advance while they're waiting for their turn, and is happy for us to use that money to help others while they wait for their turn. What we're doing is creating a big virtuous cycle, a virtuous community where we're all helping each other. We are one ummah. We should all be helping each other. So it's a virtuous cycle where we are all helping each other as well as helping ourselves. You can be, happy knowing that your money is helping someone else, rather than your money being in a bank, where the bank is using that money to fund debt and riba, right? Using your money to fund debt and riba. You can be happy in the knowledge that your money is helping families to avoid debt and riba, because that money is helping put people into debt-free, completely halal homes, right? We know the severity of dealing in riba. We know that it is equated to waging war against Allah and His Rasul. We know in some narrations it is equated to fornicating with your own mother. Imagine the punishment of that. Now imagine the reward of helping one family avoid riba. Imagine the reward of helping multiple families avoid riba. And on top of that, you get a financial return as well when your money's in our savings account. So the reason we reward people who open a home savings account with us is because they are effectively feeding the system and helping the system, and we want to reward them for feeding into the system. So anybody who opens a home savings account with us enters what we call a priority waiting list, where we can serve you significantly quicker than the public waiting list. And if you want to know what those timeframes look like, you can go onto our FAQs on our website, where depending on the amount of funding you need and the amount of deposit you have saved up, it will give you an estimate of what your wait time could be. And even then there is a wait time, I have to be honest with you, because the demand is just so astronomical. We get people coming to us literally daily saying, this is the product I've been waiting all my life for. I've been renting all my life. I never thought I'd be able to buy a home. And now I've finally found a product I'm comfortable with. Alhamdulillah, we're so proud of this achievement, but it means the demand is astronomical. So even through the priority waiting list, there is a wait time. Probably about the quickest we can serve you is about 9 to 12 months. And go on the FAQs and you can see what it would take to achieve that time frame. So we're going to cover our savings accounts now, inshallah, to make it clear what that looks like, and so you can decide whether that's the right route for you as well, inshallah. Okay, let's get on to it. Sheikh Salman's going to quickly cover some of the Sharia perspective, and then I'm going to cover the product itself, inshallah. And then as promised, we're going to get into the FAQs.
So here, just to reiterate, when I spoke about the Sharia principles earlier, that was where we, as a funder, are providing funding for you, the customer, to purchase a home and live there and buy it off us over time. So that was, if you think of it as a financing product. Here, you're sort of on the other side of the equation. You are providing funding to us to then use that funding to provide to customers, and that customer could be you when your turn arrives to buy a home and to live in it and then to buy that off of us. So what are the principles that govern when you are providing someone else with your money to effectively manage on your behalf and invest for you and give you a return? Because when you put your money into our investment savings account, we will share the returns, the rental returns we get from properties, we share that with you. So effectively we are using the money that you've put into those accounts to fund properties. What principles do you need to be aware of when you're giving someone else your money, whether that's us or someone else? The first thing I say is going back to that principle of al-kharaj bil-daman. Daman is that second word, which is risk or liability. When you're giving money to somebody else and you're expecting a return, then the key red flag to look for is the person managing my money or taking my money, are they guaranteeing to give my money back? So is there a credit or a debt relationship? This is very, very important, because if there is, in principle, you shouldn't have a right to a return on top of your capital, because then that would be interest or riba. So a very quick example, if I put money in a bank account, in a current account or a savings account, we know that those pay interest, and as Muslims, we're not allowed to take interest. Why? Because when I give money to a bank, I'm effectively lending money to the bank. The legal relationship is actually a loan. Many of us don't realize this. We are lending money to the bank, and we're actually mandating the bank to use our money in whatever the bank does. So if that's a conventional bank, they're going to lend that money out on their mortgage, for example, mortgage book. If they're an Islamic bank, they're going to lend it out on the Islamic mortgage book. And I described both those products earlier on. So firstly, I need to be comfortable, if I can be, that what they're doing with my money is Sharia compliant. And that's actually a really important consideration that many Muslims don't actually think about, because when I put my money in the bank, I think I'm just parking it there. But actually, firstly, it's a loan to the bank, and secondly, it's an investment decision. It's not just leaving money somewhere like under a mattress. It is an investment decision, and it has its own risks, but also it has its own Sharia considerations. So whether we put our money in a conventional bank or an Islamic bank, we should just need to bear in mind that if I'm getting a rate of return, whether that's called a profit rate from the Islamic bank, because that money is guaranteed, and it has to be guaranteed by law. So if a bank is providing a current or a savings account, by law, the bank has to guarantee, has to promise and commit to giving your money back as a credit risk to you. And so even if they're giving you a profit rate on top, I would say in terms of Sharia compliance, there's a red flag there that we should be aware of. That's the first thing. The second thing is what's the underlying activity? In Arabic we call that amal or a'mal. What's the underlying activity that is being carried out with my money? With the bank, I've explained that that activity might be something that's not suitable for me. So as a Muslim, I don't want the bank to do that with my money. I'm going to look to put it somewhere else. But suppose I were to invest it in the stock exchange. And some people are sophisticated enough to look at various companies in the stock exchange, read their annual reports and read the information provided by those companies and make their own decision as to whether those companies are Sharia compliant or not. Most of us don't have the time or have the ability to do that. So what we often do is give our money to a fund that does it for us, or some sort of index that tracks, and that has sort of what they call a Sharia filter or a Sharia, what's the word? I forget the word now. Screening. Yeah, Sharia screening. So they apply the Sharia screens to determine which companies are Sharia compliant or not. Now, if you were to be quite strict and conservative with your Sharia screen, you wouldn't tolerate, for example, if that company has any interest-bearing debt, or if that company has any haram income. The problem arises by the fact that the vast majority of companies, 99.999% of companies on any stock exchange, will have some level of interest-bearing debt and some level of haram income. And so there's a body in Bahrain called Awafi. Most Sharia compliant indexes or funds, they will apply the Awafi Sharia standards. The Awafi Sharia standards has a tolerance level of up to 30% interest-bearing debt, which means that that company, imagine it has £100 million of capital, 30 million of that is borrowed from conventional banks on which they're paying interest. So many of us, if we were to hear that, we think, well, actually, how is that company Sharia compliant? In principle, it's not, but that's a tolerance level in order to give investors at least some opportunity to invest in the stock exchange. Otherwise, Muslims wouldn't have any opportunity to invest in the stock exchange. My personal view is I don't invest in listed stocks of this nature because I don't think I want my money to work for a company that operates by borrowing money from interest-bearing banks. That's something I personally choose. I don't want to do with my money. So then I have to look for another opportunity. And really, this is where what we're doing at Pfida is providing a service to the community, because what we really need is community-based financial institutions that are providing investment opportunities to the community that are based on Sharia principles and don't have to make these compromises. So if I don't want to put or leave all of my money in the bank now, I'm not saying we should take all of our money out of the banking system, because that's impossible. We need banks to transact. We need current accounts. But if I'm leaving all of my money in my current account, my savings account, I think I'm deeply uncomfortable with that. Yeah. I'm uncomfortable with putting it into listed stocks because of this tolerance threshold of non-Sharia compliant debt. So really, I'm looking for an alternative asset class. And until recently, there was none of those really, and even now there's a few. So it's not just us. There's Pfida. There are a few others in the market, and we're trying to create these opportunities for the community where we can not only get a halal return on our investment, but also when you look at what's being done with our underlying activity, it's not just halal. It's also tayyib. It's ethical. It's, for example, with Pfida, your money is helping people avoid riba and get into a home and have peace of mind that the home they're living in, the roof over their head, isn't a result of a compromise. They're not having to compromise their faith in order to have a home. And so if we're helping them to do that, that has a tremendous moral return. There's a sadaqah jariyah. Exactly. And it's that tremendous moral return that we get when we come to work every day, but also our investors get and our account holders get, because their money is working for that purpose, not only to help them when their turn comes, but also until their turn comes, it's working to help other people and provide benefit to the whole of the community. And so investment is not only, in our view, not only halal, but also tayyib. It has a good social impact on our community.
So how does our investment savings account work? Well, effectively, when you open an investment savings account with us, what you're doing is buying shares in that special company I mentioned earlier, which is the company that owns all of the underlying properties. So you become a shareholder in that company. What does that mean? It means you are now entitled to a share of the profits or the income of that company. This company actually belongs to you and our customers. Pfida just has a 1 penny share in this company, which allows us to manage it on your behalf. You can think of us a bit like an accountant. So imagine you have a company which owns a bunch of assets, and you hire an accountant to manage that company for you. The accountant doesn't have any right to those assets. You are still the owner of that company. You are still the owner of those assets, and that's exactly how our relationship works. So we've set up this company which owns all of the underlying properties, and as a savings account holder, you become one of the effective owners of this company, which enables you to receive a share of the income, and that's the return that you get on your savings account with us. It's a genuine profit share, as opposed to interest on a loan. You are actually receiving income from this operational company that is renting properties out and making income for you. And Pfida takes a share of that, as well as our management fee. And the way we actually structure that profit share is such that we don't take anything until we've hit your target level of return for you. And that's our incentive to write really good business and make sure that we are buffering you against some of that volatility that we might see. For example, if a customer isn't paying rent, we need to claw back equity. So that's our incentive to not only write really good business, but then manage that business really well, because we know we're only going to make money ourselves if we're hitting your target level of return first, and we're only going to get what's left over, right? So that's how we've structured the savings accounts. Now, if you need your money out, we recommend giving us a minimum of 3 months notice. And it's important to note here that this is not a bank account. With the bank account, as Sheikh Salman mentioned, you're lending money to the bank. That's capital guaranteed. Now, in theory, if you're lending money to someone, there's nothing wrong with that. But if they give you a return on that money, that is where it becomes riba. So where your return of capital is guaranteed and you're only subject to credit risk, any money you receive on top of that is riba, just like in a bank account. So here we've structured it differently. It's an investment savings account, which means there's an element of risk, and it's worth covering that very quickly. The only way to accept a return on your money is to be willing to take an element of risk. That is the fundamental principle of Sharia. Al-kharaju bid-daman, the reward follows the risk. Okay, so what is the risk? Well, let's take a step back and think about what we're doing here. Imagine you're very wealthy and you've got £100,000 in your bank account, right? You may use that £100,000 to buy a property. Now, when we buy property, we generally don't think too much about risk because it's quote unquote safe as houses, bricks and mortar investment. The risk is there, but it's low risk. Now, what is the risk you take when you buy a property? And there's risk with any type of investment, but there's different levels of risk. What is the risk you take when you buy a property? Well, the risk is if that property is destroyed, a hurricane comes and blows it into the sea, the property is destroyed and there's no recoverable on it. The insurance fails as well. Now you've lost your £100,000. Now, that doesn't happen all too often. We don't often hear of properties being destroyed. We don't often hear of insurance companies failing. That doesn't mean it can't happen. It can happen, but it's a low probability. Now, in that situation, you would lose your full £100,000. Now let's consider what happens when you invest your money in a Pfida savings account. What your money is doing is being spread across our entire portfolio of properties. So that same £100,000, instead of going into one property, is spread across all of our properties. In other words, rather than all of your eggs being in one basket, they're spread across multiple baskets. This is what we call diversification benefit. So it's the exact same asset class, the exact same risk profile as if you were to use that £100,000 to buy a property yourself, but you've got the added diversification benefit, which means even if that worst case scenario did happen to one of our properties, if one of those properties was completely destroyed with no recoverable, yes, there would be a loss. But if that property is worth 1% of the portfolio, the loss would be 1% as opposed to your full £100,000, and that would net off against the returns you're receiving as well, inshallah. So it's very important you understand before considering our savings accounts, you understand these are not bank accounts, these are not capital guaranteed. This is an investment into a low risk asset class, which is bricks and mortar properties. And it's very important you understand the profile. So when you do sign up with us, our platform will ask you to tell us what kind of an investor you are. It's called an investor declaration. Now, it will ask you, are you a high net worth investor? Are you a sophisticated investor? Have you received financial advice from an independent financial advisor? Or maybe you're none of the above. When you click on each of those categories, it will tell you what those mean, so you'll know whether they apply to you or not. It's very important you fill this out. And if you don't fall into the high net worth or sophisticated or advised categories, then in order to open a savings account with us, we will require you, and it's a regulatory requirement. So this element of our business does come within regulation. We will require you to get financial advice before you can open a savings account with us, and we can facilitate that. So it's just important that if you need to receive that advice, the advisor will actually step you through the differences between our investment account and a bank account, and make sure you fully understand that it's not a bank account, and make sure you fully understand the contract that you're engaging in, so that you're going in with your eyes wide open. And this feeds into the notice period to get your money back as well. With a bank account, when you want the money back, you tell the bank, I want my money back, and that capital is returnable on demand because it's a debt, right? That's how a bank account works. Here it's an investment. So the way we give your money back is we raise new capital continuously. And the way we raise new capital is we have a quarterly investment window. So once every quarter, we invite people to open savings accounts with us. And those windows generally last around 2 weeks. We have a target we want to hit in each window. Once we hit that target, usually the window closes. We may, if there's a lot of demand, keep it open a bit longer, but typically we've never kept a window open for more than about 2 weeks. So there's a lot of demand for these windows and they do tend to close quickly. So if it's something you do want to do, make sure you do your research now, because the next investment window opens on the 1st of June. And if it's something you are interested in, make sure you do your research now. If you need to get financial advice, make sure you're getting that in advance, so that by the time the window opens, you're ready to apply and you don't miss the window, inshallah. And if you do miss it, it's not the end of the world. We open investment windows every quarter, inshallah. But once you do invest with us, open a home savings account, then you get onto the priority waiting list, and then your countdown begins for us to be able to fund your home, inshallah. I hope that all makes sense. Okay, let's move on to the next slide. Okay, so just comparing our savings account to a bank savings account. First of all, with our account, you get onto that priority waiting list. If you're looking to buy a home, the only way to get onto the priority waiting list is to open a home savings account. We call it GYS Home. GYS stands for Grow Your Savings, right? So this is for people who want to buy a home with us. We also have other savings accounts for people who don't want to buy a home with us. So you don't have to be looking to buy a home in order to open a savings account with us. We have other savings accounts as well, and I think we've got a slide coming up to show what those look like as well. Our product is a true social impact product, because rather than your money in a bank fueling debt and riba, your money with us is helping to combat debt and riba. We have the opportunity here, my dear viewers, to change the face of riba with our hands, to actually fight against riba, and this is our opportunity to do it, inshallah. The returns are completely halal, unlike in a bank account. Those returns are a genuine profit share on the rental income that we're making, and it's as simple as that. There is no loan, there is no interest. It's a genuine profit share on the trade of the company. That money is, interestingly enough, Zakat exempt as well. So the money you have in your bank account, you have to pay Zakat in that. The money you put in an investment savings account with us, there's no Zakat to pay in it. And if you're scratching your head and wondering why, we're going to cover that in just a minute. Sheikh Salman's going to take you through it. And then you get a halal positive return on that through our account, whereas in a bank account, you're combating inflation and you're actually paying 2.5% away in Zakat every year. And by the way, Zakat is extremely important. We must pay our Zakat. It's very important to pay our Zakat. At the same time, if you're trying to save up a deposit to buy a home and you're paying 2.5% of that away in Zakat every year, after 4 years, you've paid away 10% of your deposit in Zakat. And you'll, inshallah, once Sheikh Salman explains it, you will see the wisdom behind this savings mechanism. So it makes it easier for you to save up as well. The fact that it's already Zakat exempt, your Zakat liability is already taken care of effectively. Okay, let's move on. Hot topics. So we're going to cover 2 or 3 slides on hot topics, effectively things people ask us about a lot. And then inshallah, we're going to get straight into Q&A, and we're going to try and save at least 45 minutes for Q&A, because I can see our team have already been furiously answering questions in the background. We've had around 100 questions come in already, and inshallah we're going to save plenty of time to answer all of your questions. So very quickly on tax, Sheikh Salman.
Yes, so when you open up a savings account, as was explained, your money is going into a special company, so you get shares in the company. You're effectively an owner or part owner of that company, and then the returns you get in terms of a share of the rental income from the properties is paid to you as a dividend. So that the annual tax-free dividend threshold in this country at the moment, or imminently, is going to be £500. So you can receive up to £500 of your return in dividends, totally tax-free. Brother, do you have an idea of how much you could invest in terms of amount to get up to £500 of tax free dividends?
So on our higher yielding savings account, which is for people who aren't looking to buy a home, they just want to park capital and get a decent return, you're looking at about in the region of about £10,000 you could save with us, completely tax-free, as long as you aren't already using your tax-free dividend allowance elsewhere through some other investments. And if you are wondering, what dividends are, chances are you're not already using your dividend allowance.
Yeah. And just to bear in mind, if you're looking at other investment opportunities, if you're getting a Shariah compliant fixed income type of investment, or a sukuk, which is very similar to a fixed income, or an Islamic bank account that pays a profit rate, all of those are actually taxed under English law as though they were interest, specifically because they're in terms of the product structure, they're effectively debt-based structures. So if they're debt-based, they'll be taxed as though the return will be taxed as though their interest, and then you'll pay your income rate on that income. So if you're a higher rate taxpayer and you're paying, say, 40% income, if your rate of return there is 5%, and 40% of 5 is what?
40% of 5 is about 2%.
2%. So your net actual real rate of return wouldn't be 5, because we pay 2% of that to HMRC in tax, and your actual real rate of return would be 3. And then if you're paying Zakat on top, because these are also not Zakat exempt, if you're paying Zakat on top of that, that's another 2.5%, which leaves you with what, 0.5% actual real rate of return.
Yeah.
Whereas with our investment, if you're investing in the GYS home in order to get a spot on the waiting list, you get a target rate of return of 1%.
Yes.
And that's actually your...
So on our GYS home account, people who are looking to buy a home with us, you can invest up to around £50,000 with us, completely tax-free at the moment. This is as at the time of recording. This is very important you keep up to date with your own tax affairs. Don't take any of this as tax advice. You need to get your own tax advice, but this is just general themes to be aware of when considering your tax planning, inshallah.
Yeah, so just looking at our rate of return, it is what it is, because if you're within your dividend threshold, then that 1% is 1%.
Correct, and you're not paying zakat.
And you're not paying zakat on it. And if you're not looking to buy a property with us and you're investing in our high yielding account, that we're giving up to 4.7%.
Correct.
And again, if you were to get a like for like, again assuming it's within your dividend tax-free threshold, to get like for like on a fixed income or a sukuk or a bank account, you'd need something much higher than that, wouldn't you?
Yeah, correct. Yeah, because as Sheikh Salman mentioned, let's say you're getting 5% on a bank account or a fixed income account, you're paying, if you're a higher rate taxpayer, you're paying 40% of that away in tax, so you're left with 3%, and then you're paying another 2.5% in zakat, so you're actually only left with 0.5%, which compares against our 4.7% target return, which is actually, you get to keep all of that. So it's important that you're looking at how much money you're actually left with, not just the headline figure.
Yeah, should we move on to the next slide?
Yeah.
Yes, so zakat, very simply, because zakat, of course, is quite a complex area of law, and there are also differences of opinions between the madhabs on zakat. I'm not going to go into all of that detail, but at a very, very high level in terms of overarching principles, if you buy a property to live in, of course, that's your home, zakat is not due on the value of that property. If you buy a property in order to rent out to another person, and then you rent it out, any income you get from that property, for example, the rent, that will be zakatable at the end of the year, based on how much of that you've saved. But the capital value of that property, the money you put in to buy that property, that's not zakatable. Why? Because you have activated that money. You haven't left it dormant. You haven't hoarded it. You've activated it in a productive economic activity. And if we look at the principles of zakat across the board, we find that zakat is really a charge or a cost of hoarding your money for a whole year. Because what have you done? You've not spent it on yourself or your family, whether it's basic needs or luxuries, it doesn't matter. You just not spent it, you saved it. And you've also not given it in an economic activity that will benefit you and other people, right? So whereas if you buy an asset and then you rent that out to somebody, you're giving somebody else a home, they're paying you rent. So you're getting a rental income. You're now saving money from that rental income and potentially paying zakat on that. But also of that rental income, the money you're spending, you're giving somebody else an income. They're spending, they're also saving, and at the end of the year, they're paying zakat on that saving. And so can you see you're circulating wealth? You're creating a kind of catalyst for the circulation of wealth. And so because of that, in Allah's divine wisdom, He's ruled that in that situation, zakat would not be due. And so the thing to remember is when you open a savings account with us, that money is within a few days or weeks deployed and committed to buying a property that's then rented out to one of our customers. And therefore, it's not zakatable because of this principle. Now, that's not to say that if you want to, you shouldn't pay the zakat on it. We do have some of our account holders who tell us every now and then that, I just pay the zakat on it anyway. And that's a really good thing, because then it says it's an act of sadaqah. And that's not to be discouraged. It's very important that we reiterate, we're not encouraging people not to pay zakat. We're simply informing you of what principles apply in these specific situations, and in particular in the situation of our savings accounts. The other thing is when you open an account with us, you get access to our tech. So you have your login. Once you log in, it will prompt you to enter your zakat date. That will be a date in the Islamic calendar, a lunar calendar. Often people choose the 1st of Ramadan, the 15th of Ramadan, or a time around Ramadan. When your zakat date comes, the tech does a calculation, there's an algorithm, and then it notifies you saying the money in your account has either been deployed, therefore there is no zakat, or some of it's been deployed and some of it hasn't, and therefore there's zakat liability on a certain part, or that you just invested yesterday. So you opened an account yesterday, you put in some money, there's very little chance that will be deployed immediately, and therefore the whole of that could be zakatable. So it's just important to bear in mind that the zakat exemption doesn't apply from the very day you've given us the money. It will apply once that money is committed, and it will then apply on your zakat date.
Yeah, and our tech will track all of that and let you know exactly how much has been committed and exactly how much hasn't been, and therefore zakat is still due on that amount, and it will notify you automatically, inshallah. Okay, so I think we've got one, maybe two more slides left before we get into Q&A. Just very quickly to cover our app interface for our customers, and you get access to this when you buy a home with us. You also get access to it when you open a savings account with us, but it's two slightly different dashboards. So when you open a savings account with us through our app, you can track your investment, you can track your returns and everything, and you can download your certificates and everything from there as well. But the really powerful part of our app is when you become a home buyer, you get access to our home buyer dashboard. Now, I want to just very quickly take you through what makes this so powerful. To really understand this, first you need to think about a conventional or a mortgage product. So let's say you have a mortgage with, let's say, Barclays, for example, and your monthly payment is £1,000 per month, which is your interest plus your capital. And now you get promoted, and you've got a 30-year term. Chances are within that period you may get promoted. Your income may go up. So you get promoted and you decide, actually, I can afford to start paying £1,200 per month now. Well, you can't. I don't let you do that because it's a debt. It's a rigid debt liability over a fixed period of time. So if you want to start paying £1,200 per month, what you actually have to do is go back to Barclays, apply for a brand new product, go through the time, the cost, the headache, the stress of applying for a brand new mortgage product. That will have a cost implication as well. And you don't even have the information to know if you're making a good decision until you've gone through that process. Now let's look at what our tech enables. So first of all, when you open your home buyer dashboard, it gives you all the metrics to do with your agreement. So it shows you how much equity you've already purchased, how much is left to purchase, shows you what your monthly target payments are and how they break down between rent and equity. It shows you your future projections. Here's, based on the payments you're making, here's when, it's likely you're going to get to full home ownership. It shows you how you're doing against your original projection. So it gives you all of the information to understand your agreement. But then it gives you the tools to manage your agreement as well. And this is where it becomes really interesting. So you can go into our app literally from month to month, and it's a web app. You log in through a web interface, but it's adaptive to your phone screen, so you get the same experience as a mobile app as well. So now you can go into your payment settings, and you can say, well, this month I'm going to pay my target payment. That's the default payment, which it defaults to already. So that goes through normal. Actually, this month, I don't want to buy any equity. I'm just going to pay my rent. Click done. You just do it through your app. This month, I've been promoted. I want to start paying £1,200 per month. Well, guess what? There's no debt. You can do that. You can just buy more equity anytime you want. So you can go into the app and you can say, right, going forwards, I'm going to start paying £1,200 per month. Click done. You don't have to call us. You don't have to apply for a brand new property, a brand new product. You don't have to come into branch. You can completely self-manage through the app, which is why we've called it the Uber of fintech. Just how Uber completely changed up the way we order taxis, the way we pay for those taxis, the way we manage those taxi orders. That's exactly what we've done for you guys using our app. So you can go in there and change up your payments literally from month to month. You can also do what we call what if analysis, which is where it gets really powerful. You can say, right, my uncle has passed away and left me £10,000. Right, what if I buy £10,000 of equity this month? What does that do to my term? What does that do to my monthlies? What does that do to my overall cost? How does that compare to my original projection? Do I like that outcome? Instead of buying £10,000 of equity this month, what if I spread that over the next 3 months? What does that do? Which one do I like more? Which one helps me achieve my goals? This one? Okay, click done. You can do it at 3 o'clock in the morning, sitting on your couch within 5 minutes. And so we take all of the headache out of that process for you. We all know, for those of us who drive, how much of a headache it is renewing our car insurance once a year. When that time comes, we're filled with dread. God, I have to go and get all the quotes, and that's my weekend gone. Imagine doing that for your mortgage. Most mortgages, you have a 2-year fixed rate, and after 2 years, it spikes up and you're forced to remortgage. Imagine having to do that every 2 years. With our product, once you're on it, you're good to go for the rest of your life. You can manage it yourself through your app, taking all of the headache and the stress and the cost out of it. That's the wonderful app that we've created for you guys, and our customers invariably love it. Thank you so much for sticking with us. Thank you so much for engaging with us. We hope you found the presentation extremely useful. You can see there's loads and loads of questions coming online. I think there's been almost 150 coming so far. And now we are going to, as promised, answer all of your questions live, inshallah. So the first question, and by the way, there's no strings barred here, no holds barred. So, we want to answer all of your questions. Don't be shy. If you think it's a tough question, still ask it, and we will answer that for you, inshallah. And if it's a tough question, that's good. If we can't answer it, we want to know there's a question we can't answer so that we can improve as well. So ask your questions and we're going to answer those all live for you now, inshallah. So the first question, any progress with institutions investing in Pfida? Any rough timelines? The answer is actually yes. Inshallah, it's there's a slight spin on it, but inshallah, look out for some announcements within the coming months. We've got some, inshallah, pretty exciting news. I can't say too much, but just look out, keep an eye on your emails in the coming months. We've got some really exciting stuff coming up, inshallah. Okay, someone's asking about right to buy. Is there an estimated time frame for this? Sheikh, do you want to take this one?
Yeah, so we're actually working in earnest on this, and we are projecting that this will be available in the final quarter of this year. So we should have the product getting ready end of summer, but I think by the time we roll it out, it will be the last quarter of the year, inshallah.
Yeah, and again, we can't provide any guarantees on timeframes. We have to be totally honest here. This product, we've been working on it for a while. I think it's been at least a good 2 years we've been working on this product. It's a regulatory and tax minefield. We've had to start again from scratch several times, where it's because we've solved the main issue. We've solved the main problem of debt and interest, which we're very, very proud of. But there's some satellite issues remaining, such as being able to help people in council properties with right to buy offers, such as being able to help people with lifetime ISAs and government incentive schemes. Those are the ones we're trying to resolve now, and it's a very, very difficult task, but inshallah we'll get there. So we're hopeful, inshallah, by the end of the summer, if not by the end of the year, but please don't take that as a guarantee. We are working our socks off to make it happen, but we just can't promise anything yet. Sean is asking, I'm renting, I can't afford to save for a deposit and pay rent as well. Are there products that allow the purchase of a home without a deposit? This is something we're very, very aware of. So just because you don't have a deposit doesn't mean you're not a good renter, doesn't mean you're not going to be someone who's capable of making your payments on time. And actually, many people face this difficulty when they're paying their rent on time, month on month, doing right by their landlord. All their money's going to rent and they just can't save up. How do we fix this issue? This is something we're acutely aware of. Now, you may not know this. One of our backers is actually Crisis, the homeless charity. So they've actually invested in us because they can see that what we're doing is helping to end homelessness by helping to reduce the element of homelessness caused by debt-related poverty, which I touched upon earlier. Now, as part of Crisis, the homeless charity investing in us, they did a whole year of comprehensive due diligence on us before finally deciding to invest in us. And one of the things they made us commit to, which we're actually very happy to commit to and very proud to commit to, is that we're going to help people who don't have deposits, right? So one thing we're working towards, we're not there yet, you need to give us a bit more time, but we're working towards, inshallah, being able to have a product where you can come and start buying a home with us without any deposit, because maybe you've been renting all your life, maybe you can show us your rental history and you've never missed a rental payment, but because you've never missed a rental payment, you've just never been able to save up a deposit. Someone like you should be able to buy a home. There's absolutely no reason we shouldn't be able to help you, inshallah, but we need to get to that point. We are working towards that product and we have got KPIs in place with Crisis to make sure we achieve that, inshallah. So just watch this space. Salman, is there a possibility your company could go bankrupt and we lose our investment? Are the deeds in your name or our name? And if in your name, what are the consequences? Really great question. So as I mentioned earlier, we've structured this specifically to address that issue. So Pfida is like the accountant managing a company which you own. All of the properties are housed under this company and you are one of the owners of this company. Now, just like if you own a company and you have an accountant managing that company on your behalf, the accountant doesn't own your company or doesn't own anything in your company. And if your accountant disappears, you can get another accountant. It doesn't affect you or your company in any way. Okay, there's a bit of headache finding another accountant, fine. But the point is your capital isn't and your assets aren't affected by your accountant disappearing and you finding another accountant, and that's how we structured it. So Allah protect us if anything were to happen to Pfida. And I should stress here, Pfida isn't a one-man band. You know, we're a team of approaching 50 people. Alhamdulillah, we've got a very senior, very experienced executive team. Just very quickly, a bit about our backgrounds. I'm an actuary by background, effectively a complex mathematician. I've worked all my life in the London financial markets in very high-powered, very high-paying roles, alhamdulillah. And, you know, if you watch some of our other clips on YouTube, you'll see my story. I went on Hajj and I had a life-changing experience, and I gave up that very lucrative career to set this up because I felt that I had a responsibility to serve Allah by serving people. Sheikh Salman has also come from a very high-flying background, working for one of the large city law firms in that corporate banking structuring world, and he's worked in the Middle East for very, very large banks and institutions, alhamdulillah. Our chief financial officer, Hassan Khan, was one of the founding members of Al Rayan Bank, of the Islamic Bank of Britain, which later became Al Rayan Bank. Al Rayan Bank is the largest Islamic bank in the UK. He was one of the founding members. He became chief financial officer of Al Rayan Bank. He later became chief financial officer of Pfida Islamic Bank, and an individual with huge experience on our executive team. And we've also got our chief strategic officer, Richard Tugwell, who used to be commercial director for Virgin Money and has around 30 years of experience. So we've got a very, very experienced team. We've got a significant sized team. We're not a fickle small business that's going to get blown over in the wind, alhamdulillah. We are at a critical mass now where we've got a lot of resilience built into our business model now, alhamdulillah. But of course, no business is protected from eventualities, and that's why we've structured it in that way, to make sure that even if the worst happened to Pfida, your money and your assets belong in the company that is owned by you, and it would then be possible to find someone else to manage that for you, inshallah, and we would make sure we'd help to facilitate that, inshallah. What would happen if you're not able to repay the property value within the time scale? Are there any penalties? Sheikh, do you want to take this one?
Yes, so remember when we described the product, we said that there is no debt. So technically, although we have a target term, which you will advise us of, you'll say, well, I'd like to become owner of this property in 20 years or 25 years or 30 years, then we'll create a target schedule of equity payments. Remember, there's no obligation to stick to that. So if along the way, you, for example, can't make payments for 6 months, so you just pay rent for 6 months, you don't buy equity, instead of 20 years, it's now 20 years or 6 months. So you just carry on. And that's the level of flexibility and peace of mind that our product gives to our customers. If you think about it, with a bank mortgage, you have to pay your repayments on the nose every month. And if you don't do that for a month, 2 months, you're in default and could lose your home.
Yeah, absolutely. So the key thing here is there is absolutely no debt. If you don't buy out our share by the end of the term, there's no penalties. You've not done anything wrong. There's no obligation on you to buy us out by the end of your term. And our policies will always extend that term for you if you want us to extend it as well. Can I adapt the home for disabled people? This is a nuanced question. It will depend if you need to make structural changes. Unfortunately, we just can't allow structural changes. But if there's no structural changes, let's say, as a pure example, you want to install a stair lift, that's something that could certainly be accommodated. If it requires, as I say, knocking holes in structural walls and in floors and ceilings, that's where unfortunately we can't facilitate. Can I open the account jointly with my family, for example, with my spouse and my kids, so that after a few years my kids can continue to own the property? So I think you mean the home buying product, although I'll answer it for the savings product as well. On the savings product, we do allow you to have more than one person on the account. So some people might have the account in both them and their wife or their husband's name. We only allow 2 people on the account, and that's for the savings account and also the home buying account. Now with the home buying account, as I mentioned, the way it works is what you're actually doing is buying more and more shares over time in this company that owns the property. So your ownership is increasing and your ultimate rights over the property are increasing as you buy more shares. Now, shares can be passed on to children, just like property can be passed on to children. So even though initially perhaps it will be you and your wife on the agreement, over time your children can take over the agreement. So those shares can be passed into your children's name and the agreement can be passed into your children's name as well, inshallah. Yes, great question. Someone's saying, so let's say I buy a house with Pfida and I've put £100,000 in for this £200,000 house. and now later on I have a life event, I want to go on Hajj, I want to withdraw £50,000, can I do that? The answer is yes, and this is one of the beauties of our product. It's like an offset account, right? So what you're actually doing when you're making payments, when you're buying equity, is you're actually putting more money in your savings account with us. And the more you have in your savings account, and as I mentioned, the savings account is actually buying shares in the company that owns the property. Now, the more money you have in your savings account with us, the more we offset your rent. Your rent reduces and your partnership rights increase. But because it's a savings account, you can ask us, to take some of that money back out again. With a mortgage, once you pay off your debt, that's it. You can't get that money back. With us, some of our customers plow all of their money into it to minimize their rent, because you can take some of that money back out of your savings account again later. As I say, we recommend giving us a minimum of 3 months notice, which aligns with our quarterly investment window cycle, where we raise new funds. We use that new funds to provide you your exit before funding new properties. What's the benefit to us? Well, the rental income. Our business model is built off of the rental income that we're charging to our customers. That's how we make money as a business. That's how we profit as a business. And inshallah, it enables us to offer this wonderful product where we can also be very fair to our customers in the spirit of the true Islamic partnership. How do you calculate the rent? Really great question. So we've got an FAQ on this on our website. Do check it out. It goes into details of how we do it. Very high level. The first thing we do is we look at the local rental market for that property. And that is not an exact science. So we come up with a reasonable range that we think the rent for this property should be within. So we come up with a low estimate, a medium estimate, and a high estimate. Now, our mission is to charge you a rent within that reasonable range. And as I said, it's not an exact science, so we want to be within a reasonable range, right? Now, we have to overlay that with other business considerations. For example, what's the state of the economy? What do we think rents are going to do in the future? What are competitors doing? And also, ultimately, it comes down to, what do we need to charge to make money as a business? Because we are a business, we have to be profitable, otherwise we can't help anybody, right? So what do we need to charge to make money as a business? And our goal is to be able to charge an amount which meets our profitability criteria as a business, whilst also fitting into that reasonable rental range for that property in that market. So what that means is, in some areas, we may end up at the higher end of the range. In some areas, we may end up towards the middle of the range. In some areas, we may even end up at the lower end of the range. But the point is, we want to be within a reasonable range so that we can be very comfortable that we are charging a reasonable rent to our customers and also being fair to ourselves. Great question. Someone's asking about stamp duty. Really glad you asked this. It's really important you understand the stamp duty consideration. So as you know, when you buy a property, there's a tax called stamp duty land tax, which needs to be paid to the revenue. Now, when you buy a mortgage property with a mortgage, you buy the property, you pay stamp duty, and that's that. And you might get some first-time buyers relief and stuff like that. With us, it's a slightly different process, and it's important to understand how this works. So initially, our special company will buy that property. So it'll be owned by this special company, of which you are one of the owners, right? So when this special company buys the property, it will pay stamp duty on that property. And we will pay that. Our special company will pay that stamp duty. Now, later down the line, once you've built up your equity, you will then buy that property, and the property will transfer into your name. At this point, you will pay your stamp duty. Now, some of you may be thinking, oh, does that mean there's 2 stamp duties involved versus 1 stamp duty with a mortgage? And the way to think about it is this. Imagine you're renting a property from a landlord. When you're renting a property from a landlord, you can go to your landlord and say, I would like to buy your property from you. And the landlord may say, sure, I bought my property 30 years ago for £100,000. It's now worth £500,000. So, buy it from me for £500,000, which is a fair market price. And you'll say, yeah, sure, that's a fair price. And you'll pay £500,000 for the property, and you'll pay your stamp duty on a £500,000 purchase. Okay, and that is a very fair transaction. With us, in the exact same situation as your landlord, you can come to us anytime, say, I'd like to buy the property. The only difference is, rather than saying you have to buy it all at once, we say you can buy it gradually over time. So we will say to you, okay, sure, we bought the property 30 years ago for £100,000. It's now worth £500,000, but we'll sell it to you for £105,000, right? Why do we say £105,000? Because that is the stamp duty we paid up front. we want to make sure we're not making a loss. So we don't take the upside, we gift all of that to you. We just want to make sure we're not making a loss. So rather than you paying stamp duty twice, the way to think of it is you're on your £500,000 purchase, you're actually buying it for £105,000 and you're paying your stamp duty on a £105,000 transaction rather than a £500,000 transaction. So actually what you're getting is a £395,000 discount. So even though we bake the stamp duty that we paid into the acquisition cost that we charge you, you're still in the long run expected to be making a significant upside, getting a significant discount when purchasing the property from us. So that's the way to think of it. When the landlord sells it to you for £500,000, that bakes in the original stamp duty that he paid, as well as all the upside in the property value. All we're doing is not baking in the upside of the property value, we gift that to you. As again, I said earlier, if you want to sell the property, we'll sell it as partners, then we will take our share of upside and you take your share of upside. But as long as you're buying it from us, it's our mission to facilitate home ownership, particularly amongst Muslims who are very financially excluded when it comes to home ownership. And we decided very early on that we will build our business around making money off of the rental income that we make rather than the capital appreciation in order to keep it affordable for our customers, because that is the only way to keep this genuine halal product affordable. And if you actually look at the order of things, conventional mortgages tend to be the cheapest sort of funding rate for buying a house. Islamic bank mortgages tend to cost more, and then shared ownership products tend to cost substantially more, to the point where it's actually not feasible to fully own your home through a shared ownership product. What we're doing is providing that shared ownership type product, but flipping the script on its head and making it affordable by saying we don't need to take all of that upside in property value. Our business can be very sustainable by making the rental income, and we can actually make very healthy profits just from the rental income. We don't need to take that upside when you're buying it from us, so that we can facilitate making this affordable for you, inshallah. Sheikh, one for you.
It's about the scholars that have approved our product. So our product has actually been approved, actually our business as a whole has actually been approved and certified from end to end, both in our funding model and in our home finance product by the Islamic Council of Europe's Shariah certification unit, which is called Islamic Finance Advisory. As you know, the Islamic Council of Europe was set up by Sheikh Al-Haddad, so he's a great supporter. He understands our product. And the specific scholars who certified our product are Sheikh Sajid Amar and Sheikh Fuad Abdu of the Islamic Council of Europe. So we were actually very proud that we have not only internal Sharia compliance and audit, but also every year we have an external Sharia certification and an external independent Sharia audit.
Yeah. Okay. Someone's asking if the market value of the property declined significantly, what would the impact of that be? So it's very important to understand that when we sell our equity to you in the property, we always offer it to you at the original acquisition cost, i.e. whatever it cost us. Now that's true if the property value is going up. It's also actually true if the property value is going down. The difference is if the property value is going down, you don't have to buy it from us. So you might say, well, actually, I don't want to buy any equity at the moment because it doesn't make sense. It's, you know, the value of the equity is lower than the price that you're offering, and that's absolutely fine, no problem at all. So we'll always offer it at that price. It's up to you if you want to buy it or not. Now, what we find with most of our customers is in the long term, property values tend to go up and up and up in this country. It's very rare for property values to go down. There may very occasionally be a property market crash, but even after that, it tends to start recovering and going up again. And we've seen that very recently, in fact. So what we find with most of our customers is they just want to get to full home ownership. And we know in the UK, people want to own their property. We know that people want to get to full home ownership. So we find with most of our customers, what they're not doing is every month getting the property valued again and seeing whether it is worth buying equity that month or not. Most of our customers just want to get to full home ownership in the hope that, in the expectation that in the long run, that property value is going to appreciate and they're actually, in most cases, going to be better off, inshallah. How soon after I submit my investment application will my money be in my Pfida account? Great question. So typically when you apply to open an investment savings account with us, we have to do lots of background checks. Again, this is part of our regulatory requirements. So that background checking can typically take anywhere between 4 to 8 weeks, depending on the complexity of the application, and also depending on how busy we are as well. Now, we only request payment from you once we've approved your application. So it will be at the end of that checking process. And then once we request payment from you, we'll usually give you a date that we want you to pay by, because that helps us line up funds with property completions as well. So when I talk about investing in the investment window, or for you guys, you can invest before the investment window opens as well, if you like. What I mean is actually applying to invest. So what we don't do is penalise you for how long it takes us to process your application. As long as you get your application in time before the investment window opens, then you'll be included in that, even if we haven't finished processing it yet. And actually, if you get your application in before the 1st of June, then what the benefit of that is that you actually get ranked ahead of people investing in the upcoming investment window. So we treat you like you invested in the back end of the previous investment window, which means you have a slightly shorter wait time as well when it comes to buying your home. So that's one of the benefits of actually applying in advance of the investment window, as well as obviously, if you're super keen to get into it, if you apply before the investment window, you can ensure that you don't miss out on it as well. Do you have examples of the portfolios of your investments? I'm not really sure I understand the question. Maybe what's being asked is, where do we fund homes? I think maybe that's what's being asked. So we fund homes all over mainland UK. We've gone up as far as Glasgow. We've gone out as far as Cardiff. So England, Scotland, Wales, mainland, all over. One thing to be aware of is we do have limits of what percentage of our portfolio we allow in any given postal area. So again, on our FAQs pages, we let you know which areas we are currently serving, because we're too heavily concentrated in those areas. Once we serve more customers in other areas and that portfolio balances, then we tend to open up those areas again. So keep an eye on that as well when going through your application process.
Perhaps it's about which types of properties we define from finance and which one we don't.
Yeah, so broad rule of thumb, as long as it's a standard build property, not too old, not in a bad condition. We don't do new builds either, actually, anything less than 5 years old. We generally only go for freehold properties. We don't do auction properties. So as long as it's a fairly standard property with no obvious risk characteristics, that should be fine, inshallah. And again, on our FAQ pages, we have those criteria. The home I currently own is used by my children and ex-wife, although still in my name. I'm currently renting another property with my wife from second marriage. Am I still able to purchase with Pfida? Yeah, absolutely. Our product isn't only for first-time home buyers. It's for anybody looking to buy a home, inshallah, whether it's your first home or your second or your third home. A question on Zakat.
Yeah, so the question is Zakat only due on the return from the GYS account, not on the actual amount saved in the GYS account? In broad terms, that's right. So the amount saved in the GYS account, once it's committed, it's important to understand, not immediately, but once it's committed to financing property, which may be several days or weeks after you funded the account, it's no longer zakatable. Any returns you get from the GYS account, if you ask for those to be paid out to you, then they'll be paid in cash into your account. And then if you spend that before the zakat date comes, then of course those wouldn't be zakatable. If you save that and then your zakat date comes and it's part of your savings on your zakat date, then you pay 2.5% of the total of your savings, including the savings from your GYS account.
Right. Okay. Conscious of time, I can see, mashallah, a good, I think about 80% of you are still online with us. You've stuck out with us to the end. Thank you so much. I can't thank you enough. I'm conscious that our team have answered around almost 100 questions in the background, and we've been asked something like 180 questions in total. So there's still a lot of questions left to answer. We're going to have a hard cut off around 8:30, inshallah. We're going to get through as many as we can before that. If we don't get to answer your question before that, do send your question in to us, info@pfida.com. And we'll make sure we get those questions answered for you if we can't answer them live now, inshallah. What are the key factors in being able to receive the rental discount? So the only criteria is our policy is whenever you stick to your target, you get your rental discount, right? And our tech is designed to always give it to you when you make your target payment. What do I mean by your target payment? If your target is to fully own your home in 30 years, and we say to achieve your goal, you need to pay £600 per month. Whenever you pay £600, we're going to give you a rental discount. In terms of what determines the level of that rental discount because it can vary quite significantly. Generally, the single biggest factor is the geographical location of the property. And generally, properties up north tend to get a slightly larger rental discount than properties down south. The reason being that the base rent or the base rental yield, I should say, up north is generally a bit higher. So that's just to equalize it and make sure all our customers are paying roughly the same. But if you want an indication, once you start going through the process, our underwriting team will tell you very quickly what that rental discount is likely to be. Another question on SDLT, Sheikh, do you want to take this one?
Yeah, so the question is, other Islamic mortgage providers, I'm guessing that that's a reference to Islamic banks, they no longer have to pay SDLT twice, once on the initial purchase and again when the property is transferred to the customer. Is this correct? And why does that not apply to Pfida? Yes, there was a legal change a few years ago which removed the requirement for Islamic banks to pay SDLT at the transfer of the property at the end of the term to the customer. But that unfortunately only applied to Islamic banks that are financial institutions effectively providing debt-based mortgages. So it's a law that benefits banks and banking because, and again, this is a testament that we're not providing debt. So because the law isn't there to benefit organizations like Pfida that provide alternatives to debt-based mortgages, we don't actually benefit from that.
Yeah, I mean, the point is this is a new type of product. The law just hasn't caught up yet. So the truth is, honestly speaking, it's not a level playing field right now. Right now, the tax regime favors banks and acts as actually a barrier to entry for non-bank providers such as ourselves. But inshallah, over time, as Pfida gains traction, as other players start to offer similar products, inshallah, over time, those laws and regulations will naturally catch up, because then the government will have no choice but to react to that. So make dua, inshallah, that Pfida doesn't remain the only provider doing this. We make dua that we are sparking the change, disrupting the market in a way that is positive and encouraging others to do the same, inshallah. And as that happens, inshallah, everybody will benefit from that. Someone's asking, just curious, how did the banks accept Pfida entering the market? I would have thought there would be a lot of pushback. We get asked this question a lot, actually. Alhamdulillah. The thing to bear in mind is that the UK mortgage market is worth trillions, right? I think when I last checked, it was 11 trillion or something like that. That's a lot of zeros. Most of us won't even be able to tell each other how many zeros that is. That's a lot of zeros. Now, if you look at all the major banks, they've all been operating shoulder to shoulder for centuries, and they've all been making very good profits. Why? Because the market is so huge. There is more than enough space in the market for lots of players, which is why we welcome other providers coming and offering these sorts of services. And, we want to actually facilitate that. That's what we're here to do, inshallah. So, the fact that we're another entrant into the market, just like when other banks enter the market, just like when other non-bank providers enter the market, banks aren't worried about that. There's more than enough of a market for multiple players, and the market is far too big for any one player to serve. That's a fact.
A Zakat question. The question is, for the Zakat exemption to apply, does the house need to be tenanted or occupied? No, it's the intention that counts. So long as you intend to rent the property out, even while it's dormant, Zakat would not be applicable to that property.
Someone's asking, if I start with 30% partnership share and gradually increase to full ownership, does our contract with Pfida end at that point? Yeah, at that point, property transfers over to you, our partnership ends. So that's the end of our relationship with each other. Also, after owning the property fully, when selling, does Pfida take any portion of the sales? No, because now you are the full owner of the property. So even if we were to take our share would now be zero, because we own zero. We don't own anything in the property. Will saving investment with you affect someone who receives universal credit? This is something we recommend you speak to your provider directly. What we have found is some of our customers have spoken to their providers and got wildly different answers, and it almost varies from provider to provider, from council to council. So we can't comment here. The best thing you can do is speak to your council directly and ask them directly, inshallah. Someone's asking about investment in Pfida directly. for queries to do with that, please email us and we'll deal with that. Tonight's webinar is around the home buying product, inshallah. How long have you been in business? Someone wants to just do their due diligence. Absolutely right, you should do your due diligence. I founded the business back in 2016. We started funding homes in 2019, and we really got going sort of back end of 2020, I think it was. Now, Pfida and the underlying entity, which is called Pfida Finance, are both independently audited. We produce full sets of accounts which are there publicly available for you to go and inspect yourself, inshallah, and those accounts are independently audited as well to give you comfort that those are true and fair and accurate. Will the rent change when the base interest rate changes? No, absolutely not. Sheikh, do you want to cover this?
Yeah, so again, this is the key difference between our product and the banking products. What you'll find with Islamic bank products is they benchmark their rent to the Bank of England rate plus a percentage. And so we find that with a lot of people we know who have Islamic mortgages, as the interest rates have gone up, their rates have also gone up. And as interest rates will hopefully go down, their rates will also go down. And so they're in the same predicament as conventional mortgage holders, whereas our customers who've been with us for several years now, they're actually seeing that their rental rates are not moving with those interest rates. They're just moving in accordance with our rental review as rental contracts would move.
Exactly. Our rent is reviewed once a year, just as your rent with any other landlord would be. That rent review is done mechanically, so there's no subjectivity there whatsoever. Our tech looks at land registry, house price information for your local area, and it moves rents accordingly in line with that. It's not pegged to interest rates. Is there a separate account where we build up our equity and receive a return to then buy a property? So, okay, we've got two types of savings accounts. One savings account is a savings account for people who want to ultimately buy a home with us. That's called our GYS home account. So if you're looking to ultimately buy a home with us, that's the account that you want to be looking at. That's where you can put your deposit and slowly build up your deposit while you wait for your turn. And then any money in that account, when you do buy a house with us, automatically becomes your partnership sharing your property, so you don't have to take the money out or anything like that. We have a separate account for people who aren't looking to buy a home with us, who just want to put money with us rather than leaving it in the banking system and get a truly halal, truly socially impactful return and get a Sadaqah Jariyah reward on top of that, inshallah. And that's what we call our GYS and GYS Pro accounts, where we get a slightly higher return. Someone's asking for clarity on the investment window. What exactly is it? So the investment window, once a quarter, we invite people to open investment savings accounts with us. And any applications coming in during those windows, those applications we will process and accept. Now, right now, we're allowing you to effectively invest early in the investment window. So we're effectively opening it up for you early, even though it technically opens on the 1st of June. We're saying if you want to apply now, if you apply now, we will still consider your application, we'll still accept it. The key benefit of applying during an investment window is based on how we rank you on our priority waiting list. So the way our priority waiting list works is it's based on both amount and timing of investing with us, right? So generally, somebody who invests in today's investment window, once they get to a certain level, which is typically about £30,000, which is generally the minimum deposit you need to buy a home, a fairly low value home up north somewhere perhaps. So once you get to that sort of 30,000 level, if you invest in today's investment window, somebody investing in next quarter's investment window will not go ahead of you on the waiting list, even if they invest more than you. And that's how we prevent it becoming a wealth race. What we're not doing is trying to say, right, whoever's got the most money goes to the front. What we're really doing is saying whoever is contributing to this wonderful setup and helping this to grow and build and serve the community and willing to help serve the community, whoever's supporting this initiative the most, we want to support them the most. So we are prioritizing you based on how much you're supporting the initiative. So the investment window is there to help distinguish how we prioritize people on the waiting list. And as I say, if you we're allowing you at the moment to invest before the 1st of June, and if you do that, we will accept your application and we will actually consider it as though you have invested in the tail end of the previous investment window, which means you will go ahead of people investing in the upcoming investment window on the 1st of June. And even if they invest more than you, once you reach your 30,000 mark, even if they invest more than you, they will not go ahead of you at that point. So Abdul Wahid is asking, what advice can you give to somebody who is very close to retirement age and has been renting most of his life and wants to join Pfida? See, alhamdulillah, this is what I was saying. Almost daily we get people saying this to us. I've been renting all my life. I didn't feel comfortable with any other product until I came across Pfida. Now I want to buy a home with Pfida. So for someone who is close to retirement age, a couple of options. One option is if you are approaching retirement age and you can demonstrate clearly your income in retirement, and it's clear that you have a plan for making income during your retirement, we can factor that into your affordability assessment. And if we feel that it's still affordable for you, we can still continue, inshallah. The other option is if you have next of kin, maybe you have children, then as you approach retirement, it may be that your children can take over the agreement and carry on that legacy for you, inshallah. So the best thing is discuss it with our team, and our team will go through the options based on your specific circumstances. So someone's asking about inheritance.
So the question is, once you've paid off the finance, so you're the sole owner, the property's transferred to you, what the inheritance treatment is, so that the ordinary fara'id of the Shariah will simply apply. So what you need to do is, and that's different depending on your familial circumstances. So if you go on to an inheritance calculator, there's many of those available online, like a Islamic inheritance calculator. A lot of the Islamic charities have those. You can just put in your circumstances, how many relatives of different categories you have, click, and it will tell you who will inherit what.
Yeah. Someone's asking, can a couple have two separate savings accounts for tax planning purposes and then merge them into one account later on? Absolutely. Yeah, that's absolutely possible. There would be no reason why that couldn't happen, inshallah. But one of you at the later stage would effectively have to divest your funds or effectively exit your funds, and then that would need to get added into the other one's account. And there would only be one account controller. So I mentioned earlier, two people can be named on the account. Only one person can be controller, i.e. our point of contact. So you need to elect who that person is when setting up the account.
For purposes of position on the waiting list, an example would be if one person puts in 15,000, the other person puts in 15,000, as separate accounts, they wouldn't be eligible to be reached out to. But what they could do is one person could set up their account and then refer the other person, and then together they'll get the referral credit of 30,000.
Correct. We do have a referral scheme. So again, when you log into your app, there'll be a section refer a friend, and if you refer someone, you can build credit together, and that can boost your waiting list position. It's important to note at this juncture, currently our tech is undergoing maintenance for the rest of this week and possibly into early next week. So there are certain functionalities that won't be working right now. One of those is actually the referral scheme. Right now that's under maintenance. The other element is our cost calculators. So when you log into your dashboard, if you scroll down, you'll see cost calculators where you can see broadly how much you can afford and broadly what it would cost. Those are also under maintenance at the moment. So bear with us until roughly middle of next week when they should be up and running again, inshallah. On land registry, does it show? I'm conscious it's 8:33. We've got about 10 or 12 more questions now. So as long as no more coming, we're going to try and quickly get through those, go above the hard cutoff that I mentioned, because there's not many questions left now. Our team have done a cracking job answering most of those, but let's see how far we get. On land registry, does it show the company name and us as the owner? So on the land registry, the owner is the company name, so Pfida Finance, i.e. this special company, but you are one of the owners of that company, so you own shares in that company, and again on land registry it has a note of the shares, so you are one of the shareholders, owners of that company, which owns the underlying property.
Just in terms of Scotland, the structure there is slightly different. So in Scotland, both the company and the customer are named on the land registry. If you're getting a buy-to-let, then only your name will be on the land registry.
Really good point. We do have a buy-to-let product as well for investors who want to buy property to rent them out. Now with the buy-to-let product, it's a slightly different structure. Rather than Pfida Finance owning the property, actually it will be in your name directly. Okay. Abu Musa is asking, would a self-certified sophisticated investor classify as someone that has invested in businesses, stocks and shares? Typically,
they'd have to be unlisted stocks and unlisted shares.
Yeah, okay, fine. So when you go through the investor declaration page, it will give you a description and it will explain exactly what that what would class under that category. And if you fall into it, you'll get a pretty good idea. Is it easy to switch from HPS to buy to let? What are the costs involved in doing so? So HPS, for anyone who doesn't know, is our home provision scheme, i.e. the property you want to buy to live in, and buy to let is for customers who want to buy a property to let out. Now, currently, if you want to switch from the home provision scheme to the buy to let product, that is doable. It means that you were initially living in the property, you now don't want to live in it, you want to rent it out. That is doable. We'd need to do another small assessment. There would be a small processing fee, usually a couple of £100, not a huge sum, and we could do that, inshallah. Bear in mind the rate that we charge on buy-to-let is slightly higher as well, not much, but slightly higher. Now, moving the other direction at the moment isn't possible, unfortunately. So if you do move to the buy-to-let product, it won't then be possible to move back to the home provision scheme. Now, some of the sort of innovating we are doing in the background is seeing whether we can get around that issue to enable it to move the other way as well. Bear with us on that, but right now it's not possible, so it's only possible one direction at the moment. How many properties have we financed so far? So we've got a property portfolio now of approaching about £40 million, alhamdulillah, quite significant size now, alhamdulillah. I think the value is more important than the number, because some of those properties will be £100,000, some of those will be £500,000, but about a £40 million portfolio now, alhamdulillah. Can you sublet your property once you've bought it? No. If you have the home provision scheme, i.e. a home for you to live in, unfortunately you can't sublet it. If you want to let the property out, you can use our buy-to-let product. In that product, you can't live in the property, you can only let the property out. So it has to be one or the other. Unfortunately, it can't be combined use. Any chance you can set up something similar in other countries in Europe? Really good question. We get asked a lot when we're coming to other countries. You know, we see this as a global product with a global need. Now, one thing we are doing, and again, it's still in the discovery stage, so we can't guarantee or promise anything here, but we are having discussions with counterparts in other parts of the world who want to bring the Pfida product to those parts of the world. And we're seeing how we can potentially work with other providers to roll out the Pfida product there. Early days conversations, it's not going to happen overnight, so please don't read anything into it yet, but it's very much on our radar, very much something we would love to do, inshallah. Is it not possible to fix the rent agreement for more than 1 year instead of annual review? In theory, it would be possible, but conventionally, rent in most landlord-tenant agreements is fixed 1 year at a time. And bear in mind, when you're renting from a landlord, when your rent is reviewed, it's usually only ever going to go up. It's never going to go down. We review rent annually, and when we do rent reviews, your rent can actually go down as well, not just up. And it's based on local property price movements. So if the market is going downwards, then your rent will actually go down as a result of that. So actually having it reviewed annually can be favourable, because then you can potentially in some years take advantage if that rent can go down as well. When will the 500k purchase limit be increased? Can you please give an estimate? In London, it's nearly impossible to buy a house for less than 500,000. Very aware of that, and it's a very real issue. We are now approaching, so the reason we have that 500,000 limit is because we're taking those properties under direct ownership in the special purpose company. And what we don't want is to have too much risk concentrated in any one property. Now we're approaching the point with this roughly £40 million portfolio where we can now start potentially considering higher value properties. I fully envision by the end of this year, inshallah, that cap is going to be increased. So watch this space. How strict is the survey report? Do you discard properties if there are too many red level ones? It's not a mechanical process. We have certain criteria that will make it a no-goer for us, and our team will let you know as soon as that may be the case. So when the survey comes back, if there are certain things that can be fixed relatively easily, we'll usually make it an offer condition. We'll buy the property as long as you agree to repair X, Y, and Z within a certain time frame of completion. Certain things, so there may be certain things which are red, but they're easy to repair and we can still proceed. There may be some things which aren't easy to repair, and we may say, look, we just can't go for this property. For example, if the property needs an entire electrical rewiring and the wiring is dangerous and could result in, the whole house burning down, that's something we just can't take the risk on. Or, for example, if the gas isn't installed properly, or, for example, if there's asbestos, a high level of asbestos in the property. And the truth is, the kind of properties we're going to decline will generally be the kind of properties you don't want to live in and you don't want your family living in. Because if there's lots of asbestos in there, that's going to be a major health hazard for you and your family. If there's a risk of the roof collapsing any minute, you don't want to have your family in there. So the types of properties will generally decline rather than giving offer conditions will be the ones where they're so risky and there's so much work required that we just can't take the risk. Asif is asking, since Pfida can only fund properties up to £500,000 price, would I have to fund the amount above it myself? And would rent be applicable on it? So a couple of things to unpick here. First of all, unfortunately, even if you're funding the excess right now, we don't allow property values above £500,000. As I say, inshallah, by the end of the year, we will be looking to increase that limit. And we only charge rent on the amount of funding that we are providing. So as an example, if it's a £500,000 property and you're contributing, just for argument's sake, 400,000 of that, we're only contributing 100,000 of that. Our share in the property is that 100,000, and that is the element we've charged rent on. Someone's asking, so we're down to the last two questions, alhamdulillah, so inshallah we're going to end very shortly. Someone's asking, I have a lifetime ISA with savings, can I use it to buy a home with Pfida? Unfortunately, right now, our product is not eligible for the lifetime ISA bonus. Again, one of the elements which the laws just haven't caught up to because it's a new product, which make it an unlevel playing field. So right now, you could certainly use the savings you've put into the ISA, but you wouldn't get the government bonus on top, unfortunately. And again, that's one of the things we're innovating hard on to try and combat, inshallah. And the very last question, roughly, what is the rental appreciation per year on a 25-year arrangement? So, okay, the way we conduct rent reviews is our tech is plugged into land registry information, and it looks at sold property prices in your local postal area. Now, if property prices are moving up, your rent will go up, and if property prices are moving down, your rent can even go down. Now, we cap those rent reviews so that your rent never moves by too much in any given year. And we cap it so that your total target payment after your rent review in any given year should never move by more than about 1 or 2%, right? And we've calibrated it that way very deliberately because long-term wage inflation tends to hover around the 1 or 2% level. So what that means is we've calibrated it to ensure that in general, it won't be 100% accurate, but in general, your long-term wages should be moving roughly in line with any rental increases that may be coming on there, so that your affordability on average should remain roughly constant over time, which is why with our product, once you're on there, you're good to go for life. You don't have to worry about remortgaging every 2 years and paying new processing fees, going through the headache and the cost, because you know your affordability should remain roughly constant over time, and you know there's never going to be a big spike in your rate because we've got those caps and collars on your rent increases. I hope that makes sense. I can see, I reckon a good 70% of you, maybe 65% of you are still online with us compared to how many joined in the beginning, and there's absolutely loads of you. So Jazakallah khair for sticking it out to the end. I hope you found that really, really valuable and thought-provoking and informational. We are here to serve you guys, inshallah. We are here to answer your questions. If you have any more questions, send them through to our team, info@pfida.com, and our team will definitely get back to you, inshallah. But for now, alhamdulillah, I didn't think we'd manage it given how many questions came through. Huge credit to our team in the background who have been answering questions furiously all night long. But we have gone through all of the questions. And so all that remains for us is to say, Assalamu alaikum wa rahmatullahi wa barakatuh.